Emily Wilkins in Washington. Emily?
Hey, Kelly. Well, yeah, from the Fed minutes, we're seeing that for the Fed governors, they saw that inflation was eased over the last year, but it remained elevated. All of them supported maintaining the current target range, but there was some support for a quarter-point cut in that July meeting, and increased confidence that inflation was going towards that 2% goal, but they needed greater confidence before reducing that rate. Of course, jobs numbers, a huge interest today, and the Fed did say that the labor market was in a better place, but there were concerns that payroll was overstated. They said the monthly pace of payroll, they moderated from the first quarter, and it was solid in recent months, but they did say that there were increased risks to employment. Of course, that comes as you're seeing decreased risks to inflation, although they said in their minutes that inflation pressures might persist for some time. But overall, there was a sense from the Fed that there was a better balance for inflation and employment objectives, and some said they were more or less balanced in that July meeting. They also took a look at consumer spending, and they found that lower and moderate households had rising credit card delinquency rates. They noted that consumers were shifting away from discretionary spending and buying lower cost food items and brands. So certainly setting up a lot there in those meeting minutes. You can kind of see some of that confidence emerging on inflation. Certainly will be very interesting to hear from Powell this Friday.